Hi, my name is Sudeep Alex, and I'm doing this video for business owners in the Arab world. In this video, you will get a clarity on what a financial plan for business families should look like, what it should consist of, and what it should not consist of. So you can take a better choice or make necessary changes if needed by reviewing your financial plan right now. Business owners reached so far not just because of luck. They exactly know where to deploy their money and where they can make money from. So they're very intelligent and very good with numbers. But when it comes to certain financial decisions, business owners depend on others or fall for others' words, and they get carried away into many sorts of wrong investments and financial plans that completely misalign them with the business mindset. All business owners are very kind hearted and take very simple decisions with the business. They do not like to complicate things. And many salespeople know exactly this and how to play with the words and direct investors or business owners into policies and investments that advisors want to sell rather than understanding the needs and goals of the business owner and the business itself. Many a times, I have heard of stories when a business owner wants to support a person who is trying to sell a policy, an agent who came to him asking to buy a policy or buy an investment, or sometimes it's a family member himself or herself want his help to get a policy sold so that they can show the numbers to their employers. And these kind-hearted people, they are ready to sign off as soon as they approach them asking for support. This is a very kind-hearted approach, but eventually they see that these investment or financial planning decisions, and many years later on, they see themselves completely derailed from their original plans of growing and scaling their business. And they see money is stuck in places that they last want to be in. I know of a business owner who is right now 75-year-old and doing business and had been in business for decades together. But he has signed up for retirement plans that he never wanted. He's continuing to pay for that because of his commitment to the policy and the person who sold the business. But truly, he doesn't want to ever retire from his business. So if he doesn't want to ever retire from his business, why does he have to do a retirement plan which pays him an income later on once the policy premium payment term completes? A pension and a passive income is the last thing he wants to chase for. He already has that adrenaline and the energy to pursue the things that he loves. And a pension or a passive income is very passive for him and puts him down completely. Even at this stage, he is ready to show up to his work 9 a.m. to 8 p.m. in the night, take risks in his life, and chase that client, chase that order. And that's the fun and excitement he is completely on to right now. And what use is a retirement plan and a minuscule return from the plan in his life right now? This completely puts him on a backseat when it comes to that money getting locked in a place which is not doing any benefit at all for him. You get to see several such incidents when you meet business owners in GCC area. You actually don't have to completely buy into my opinion and don't have to agree with my concepts of how business owners should manage their money. Because if you are a person who truly want to retire and exit from your business one day, then retirement planning is for you. But true entrepreneurs often never want to retire. And this is the one thing that they want to do until their last breath. What they are most interested to hear is how to set up their next generation for life. How can I transfer or pass on my business as an inheritance to my generations to come? How can they flourish? A retirement plan is not essentially fulfilling such purposes or objectives of business owners. But you got to understand the real mindset of entrepreneurs for how they use investments. They use investments not for retiring or to take a retirement leisure home one day, sitting on a beachside under the umbrella, sipping on his cocktail. But uh, they do investments so that they can scale up their own business. They find their business as the most valuable investment where they can create the maximum returns from. But they use stock market related investments so that they can create a launch pad, a cushion that they can fall back on when they are taking or going for the higher risks to scale up their own business. The wealth they have created so far would act as a cushion. So if they have to take a risk and things go wrong, they have something to fall back on. That is the reason why they build up assets. And most of the time, these kind of investments are not very volatile in nature. They are not very cautious about how much growth they can make, or could I pick a stock even though it's too risky that I can double my money. That's not their intention. They want a steady and stable growth. They want the portfolio to be very less volatile so that anytime they want to access these funds and deploy it into areas which is more profitable, this is liquid enough and accessible enough to redirect it into those investments. And why they value peace of mind and calmness in their portfolio rather than anything else. Because business owners have taken enough risks of the business itself. They know what they are sitting on and the value of what they are doing. They prefer to keep their mind and their brain calm enough to take right business decisions at the right time. A stocks heavy, volatile investment is often a distraction for business decision. That's the reason they want to keep the volatility of the stock market investments very low. What would you do if you had to take such a decision? Would you go for a very uncertain, unreliable investment portfolio? I think you would completely avoid uncertainty when there's enough uncertainty to take care of in your own business. I have also observed many pitfalls in the insurance portfolio. All businesses have all the general insurance policies in place because this is mandatory by law. Your employees are protected from their health concerns. You have workman's liability insurance. Your assets are protected using fire and public liability insurances. Your projects are protected with contractors all risk and project insurance. But when it comes to business owners, business protection insurance with life insurance, you often see many pitfalls. But whenever you see that there is a policy in place, we should understand that business owners want to do the right thing for themselves and their business. They are ready to place the money where they get the value from. But it's either the problem of the financial advisor unable to give the right advice on what are the right policies or investments to have that these pitfalls exist. I've often seen that business owners have overpaying for their life insurance coverage. A term insurance is a simple enough solution, and business owners are ready to buy it in order to protect their company, the people dependent on the company, like the employers and the employees' family. They are also concerned about their own family members because their family members are often dependent on the income from the business. There could be partners to protect each other from using buy sell agreement. What if something happens to one out of two or three partners? Then what should happen to the company and how things should go forward with the surviving partners? Those are all problems that you can solve with life insurance. But these kind of pitfalls, such as overpaying for insurance, where you have multiple policies and bring down the average cost of insurance. Coupling that with assets and net worth building instruments with real estate, bank deposits, and financial investments like ETFs, you can eventually self insure yourself and going forward, reducing the need for life insurance cover. Yet another reason to consider a permanent life insurance policy for business owners. Insurability and need for life insurance once a certain age has crossed is a big problem for business owners. Business owners might need quick access to credit when it is needed to be deployed for any needs in the business. So, if they are completely relying on term insurance options, they're taking a huge risk of chances of uninsurability and the policy terminating before the actual need comes. Permanent insurance makes sure that whatever age you are in, you are insured and you have the freedom to assign that portion of the life coverage to a bank or the credit sourcing institute against the loan amount or the credit amount that you want to secure to push into the business. Apart from some of these pitfalls that you see in the way the insurances are done for business owners, their partners, and their company, sometimes essential insurances such as business protection and partnership protection is totally missing out to protect business owners and businesses from credits and risks and legal issues arising due to partnership issues. Multiple insurance policies over differing terms, like 10-year, 20-year, and 30-year term insurance policies with the same amount, makes a much better choice over doing a single very large life insurance policy for a very long period of time. That will overpay a high cost of insurance for a very long period of time. Laddering term insurance policies drastically bring down the average cost of insurance. Combined with asset building instruments such as investing on ETFs and mutual funds and building up your net worth. Also, you can use real estate investments and bank deposits. Ensures that even if your term insurance policies terminate at every 10 years and dropping off from your financial portfolio, there are assets to back you up and you're self insured. There is also the remaining of 2 or 3 policies continuing to protect you for the remaining of the term. For any term more than 30 years requirement, you should definitely consider a permanent insurance. It's not so that you can have some cash value build up on these kind of policies, which you can access and use in the event your business demands some resources of funds. But this has the potential to leave behind a large legacy in case you would like to leave behind for your next generation, your family members, because this life insurance amount is certain to come. And it's definitely a great way to enhance your overall net worth. There are several other reasons you should consider a permanent insurance. Estate equalization is one like that. Once a business owner had 2 sons, and the elder one was completely involved in the business, but the second son had other interests. What would the father do to split the estate? Now the business is 100% of the estate that the father had. The father actually used a part of the profits of the company to do a life insurance in his name. He he wrote 100% of the business itself to the elder son's name, and the life insurance proceedings was entitled to the second son's name because the business itself cannot practically practically be split into two. So a life insurance in the name of the father resolved the problem of the business not being able to split into two, yet uh, equalizing the estate was made possible. One another practical use of life insurance policies is to do partnership protections. If you are two or more partners in your business, executing a buy sell agreement to buy back the share of a deceased partner needs liquidity in the company. Then again, if it's difficult to raise the funds to buy the share, the life insurance policy will bring the money enough to buy back the shares and protect your company. So far, we thought about how certain retirement plans completely derails the mindset of business owners from their focus into their business, how they fall into different types of wrong investments, and also the various pitfalls that usually seen in the life insurance aspect of business owners and their family members. We also had an idea about how an ideal investment portfolio should look like for business owners. Investments are the foundational assets for businesses. They need to have stock market investments, real estate, and bank deposits. And when it comes to stock market investments, it's very good to reduce the volatility of the portfolio. ETFs are a great way to do that instead of picking a single stock. However big or small a single stock is, how much ever potential it has, how much ever great the company is, your ETF will have an inclusion of that particular stock in that. And your ETF diversify your investments over hundreds of companies, that your overall risk of taking the risk of one single stock is removed. In addition, these kind of portfolios is very liquid. Anytime business demands some funding resources, business owners can access these kind of investments very easily, and in a day or two times these funds can be deployed into business. Secondly, ETF investments are not heavy on the cost side, and you never would have to find out a buyer if in case you need to liquidate, because these kind of investments can be easily transacted online through the stock exchange and get liquidated in a day or 2 days. The most important benefit of having these foundational assets is that you have different choices of investment in this portfolio, where you can choose the right investments in order to adapt with your business dynamics, including ETFs, which has buffers and downside protection, which protects you from stock market crashes, is a very good inclusion in these kind of portfolios. These kind of liquid, very stable stock market investment portfolio is rare to find among business owners, because they don't find a person who can trust them to make the investment decisions. But most of them are real estate invested heavily into real estate. These are things that they can learn and know from their experience, because these are tangible. These are very prestigious investments, and they know that is always appreciating in value. It's great to have, but the only issue could be the liquidity part, and it would be a big mistake to avoid liquid investments altogether from your net worth portfolio. This matches with your lifestyle because of the prestige, and you can leave this as a legacy for your next generation. So, we are coming to the bottom line of this discussion. If the business itself is the true income generating asset for a business owner, why they really need to lock away large amount of money into investments and plans that really don't yield any value for them? Instead of really living with this pain, it really makes sense, even though there is a little bit of bloodshed, to move away from what you really don't need and to include things that add value to you, helps you focus on what you are best doing at. That is your business and scaling your company. I get to speak with a lot of business owners every day. This is one thing that all of them say, that their existing providers are doing a good job of giving them some investments, doing some insurance, and they're happy with that. But they also say this, that they're unsure whether these investments would serve any purpose. Is it matching with my business mindset and long term goals concerning my business? Is this a distraction or helping me focus on what really matters for me and my family? This is where I could probably help you to get your financial foundation right so that you can focus on what is most important for you, that your investments are no more a distraction or a pain, but a cushion and a comfort which enables you to focus on towards the future. This was Sudeep Alex, Senior Wealth Planner for business owners, financial planning in the Arab world, in the GCC region.